Our next guest says that the bear market is over. She is looking for the rally to broaden out a bit more and still sees what she thinks are compelling entry points across many asset classes. I want to talk markets right now with Elyse Ausenbaugh, who is global investment strategist at JPMorgan Global Wealth Management. And Elyse, why do you think the bear market's over? Is this, you think the economy is not going to be as bad as expected? Do you think the Fed is backing off?
Sure. So starting with the economy, things have definitely been more resilient than a lot of people feared, and we welcome that as a good thing. I think it's really important to look at the earnings when we're talking about the equity market, which sector by sector has kind of gone through this period of rolling contraction. And so given that, you've already had a lot of C-suites kind of take these measures to shore up their margins, and that should make them better able to navigate what could be a bumpy road ahead if that macro backdrop does end up falling apart.
So if you think that there are attractive areas for entry, what would they be? Because some people look at it and say, oh, the market's run so far the first half of this year. Where do I go?
Of course. And a lot of investors are kind of scared away by this elevated valuation on the broad S&P 500. But if you strip out just the 7 biggest names in the index, or more simply look at the equal weighted version of the index, those valuations are actually below average. So we are seeing some stock picking opportunities in U.S. large caps, also taking a long, hard look at the mid-cap equity space in the United States, where we see the potential for investors to position for a reset of the cycle when that comes.
If you think the rally broadens out, though, do you think that the S&P 500 itself actually goes higher, or do you think some of those big 7 or 8 high flyers actually pull back?
Look, we are close to our year-ahead targets for the broad S&P 500, so we're navigating it with a little bit more selectivity and emphasizing to investors that they should be focused on alpha, not beta. But there is upside, and I think it's really important to remember what it is we hire equities to do in a portfolio in the first place, and that's to be the engines of long-term, multi-year capital appreciation. We still think that over the course of the next 10 to 15 years, the S&P 500 is going to be able to annualize total returns north of 7%.
So 3 years, when does the S&P break out to an all-time high?
$1 million question, right? We don't necessarily think that it can get there over the course of the next 12 months, but I don't think it's unreasonable for the S&P to get back to those all-time highs where we started in 2022 over the course of the next 1 to 2 years.
1 to 2 years, because we had someone yesterday say that not even 1 to 2 years, that this is just even an extended trading range that's going to keep going between, maybe not to the October lows, but back test 4,000, then 4,400, then 4,000. I don't know any strategists that have a year-end target above really 4,400. Do you?
No, not necessarily.
What's yours?
So our year-end target, we're right about there, 4,400.
That's below where we are.
Yeah, I know. At this point, though, we're focused on 12 months ahead, and that 12-month forward outlook is around 4,500 for the broad index. So
that doesn't even seem worth it, though.
Well, but again, focus on alpha over beta. There are opportunities for, these active managers to pick and choose the right winners. And again, start thinking about.
When did you raise your target to 4,400?
When we published our mid-year outlook back in, when was that? May. Time is flying. End of May, early June.
Where were you before that?
We didn't have a 12-month forward target for mid-year.
You're lucky. If you were 3,500, you'd be in trouble.
I know. But we've been saying we don't expect the index to revisit those October lows.
You have? Okay.
Yeah.
Good.
Yeah.
Right. That's good. That's something.
You think technology stays in the leadership?
Look, we're starting to think more about other ways to play some of these big tech themes, especially artificial intelligence, especially given that those mega cap names in the space do look overvalued. We're looking for those opportunities more in mid caps where you are seeing attractive valuations and where we think this next leg of the rally could potentially broaden out to.